Hey everyone, happy midweek. Lots going on, lots developing in the news. We're going to take a little bit of a sidestep today because there was a great little snippet video that was on the mainstream news that talked about financial influencers or stock promoters or newsletter writers, whatever term you want to give. I always kind of cringe a little bit at those titles, although technically I'm one of all or a combination thereof. Commentator, whatever way you want to kind of focus in on calling oneself. That's the space I'm in, and it's important because there's a lot of financial advisement as well as storytelling and everything, and understanding that nuance and fine line is very, very necessary. And we're going to watch this video. It's only 4.5 minutes long. And we'll start and stop it a little bit, and I'll throw in my 2 cents worth, but I'm going to do it under the kind of auspice of, I understand that in, say, the North American newsletter writing kind of sector, from my understanding from watching some of the bigger players in there, they've made comments that like 80% to 85% of their subscribers never buy a stock, which I found fascinating. So they're buying stories. They're buying kind of like a Reader's Digest about usually tied to politics or an ideology with a story. It could be that, the future of AI with robots and people find them fascinating, and they're willing to pay monthly for these kind of stories because they might like reconfirm how they feel about the future, how they feel about a sector, where they think things are going. But a lot of them that do very well aren't quote unquote selling stock, which is good because, there's a very fine line. If you provide advice in a financial means and you're not licensed, and even if you were licensed before, it's unethical. I mean, it's wrong. And we make a very, very big production of saying that that's the case. That's how we operate and how we work, because I've worked at Merrill Lynch. I know what it takes in order to go through a know your client with just one person, never mind a family, and what those needs are, what their risk assessment for their entire portfolio, what their goals are. You have to truly understand that if you're going to provide any advice, whether it's tax, whether it's offshore stuff, whether it's crypto or in our space, in mining or energy, is that we always encourage people that whatever opinion I might have or story we might tell, or even when we share with subscribers that this is what I'm buying, it's under that absolute knowledge that you should be conferring with your planner as well, because especially in the junior exploration, we're talking risk. You're taking on a ton of risk, and people shy away from that because the easy, if you take a look at some of the crypto stories over the past 6 or 7 years, where they're able to go, this is going to the moon, and outrageous claims because it was unregulated. And literally, someone from my age group who saw blatant mini market pump and dumps from the 80s, 90s, and onwards, you just look at the playbook and go, oh my goodness, that's the exact same playbook they would have used in any junior resource story coming out of the old Alberta Stock Exchange or Calgary Stock Exchange, or Vancouver, the old Vancouver Stock Exchange. It just shifted because it became unregulated and you can say whatever you want. That's obviously, tied back quite a bit, but there's still a ton of influencers, and you're well aware. And it's tough for people to see who's legitimate, who's not, who's giving me the information, and what are you intending to use it for. If it is, that you're just reading it and it's just about gold and the economy in general, well, no harm. But it is more challenging when people start buying stock for themselves and then putting the onus on someone else, saying, well, they sold me a stock. No one should be selling you a stock unless it's a licensed advisor. But anyways, let's get into this because it is important. And a lot of people might think it's kind of boring. And of course, if you go into forums, you'll read letters, responses about people. Oh, I followed this person and the stock went up or the stock went down. Is that you have to take it with a grain of salt and with the understanding that, is this person being transparent? And if they are, you might like how they talk about things and their vision of their overall, and maybe the stocks go up, maybe they don't go up. But that's very different than just simply buying something because someone's quote unquote promoting it. And anyways, we'll get into that nuance a little bit more because it's an interesting conversation and it's necessary. It needs to be had. But let's follow this here, and we'll just stop it, every once in a while.
Social media has no shortage of financial influencers, or finfluencers, as they're commonly known, promising their followers quick trades and insider tricks to triple their wealth. Sorting fact from fiction can be daunting at times, and here with some advice for how to navigate the flood of online financial advice, I'm joined by Richard Coffin, who is an investment analyst at WDS Investment Management. He's also the host of the Plain Bagel YouTube channel with more than 1 million subscribers. Richard, good to have you here with us. So what are some red flags that folks should look out for when watching finfluencer content?
Yeah, so even before getting into that, it's worth highlighting there are a lot of great creators and great content in the space, but there are some red flags because there's not much moderation that happens with the type of content you come across. So number one being, if wealth is used as the primary qualification, you see people showing off their money or their fast cars and the like, it's usually being used as a substitute for more solid qualifiers that you really should be looking for.
Let's pause there for a second. So Richard Coffin's great, and the Plain Bagel is wonderful. I don't watch it as much anymore because it's it's stuff I already know, but he does a great job, and he deals entirely more with portfolio. He is a CFA. I think when he started the channel, it was like you're following him as his journey to become an analyst. He's very sincere, tons of integrity, and he calls people out, which is great. This is what you need to see. And he's built up a ton of trust in that, which is different than if you're someone like me who's outside the industry. I've moved from that role and moved from Merrill Lynch, which would be an entire portfolio that you're managing. You're looking at off-source strategies. You're talking about derivatives and options, very specific, nuanced strategies for a family office or a family or person in general. Then you're going to take the approach that I am, focusing narrowly in mining and energy, and especially mining. That's a very small sector that's high risk, to explain to people a greater narrative. And it's important, and we always make sure, although it's not as clickbaity as putting, you can 10 times your wealth, these types of things. We've all seen it online, whether it's selling courses, whether it's selling drop shipping or whatever. We see these huge claims. Usually they steer clear of heavy regulated markets like the stock market because you're begging for trouble. But we have seen it. People try to fly under the radar and promise huge gains, and they feel like they have to because they want to get people's attention. And I think what's good is with someone like Mr. Coffin here is that he's very stoic. One would say some of it is a little bit bland, but kind of like a bagel, like a plain bagel. But that's a good way to look at it. Is we want to draw you in to the mining sector, which is is a risky business. All extraction is very risky, but because we want to highlight that it's being completely unloved, but it's crucial, and people are starting to figure that out now. When they see all these critical metals, they're starting to put together, like, wait a second, this extraction story about being terrible isn't true. And not only is it not true that we can extract things in a responsible manner, we have to. None of this future happens. Like, you're not getting any of this idealistic AI robotic future unless you have a mountain of metal. And even if we just leave the whole EV story, battery storage, because it's not trendy right now, and robots are, there's zero chance of having all these robots that either JP Morgan thinks there might be or Elon Musk without all the metal. Like, none. The amount of production that needs to come online is incredible. So when you hear someone say there's going to be 10 million robots by 2030, well, we did a little bit of a breakdown to show, well, how many mines is that going to take? And not only how many mines will that take to get open, how many mines will the quote unquote West have access to? Because we see all of these trade discussions, as we've been talking about for 5 or 6, 7 years, they're shifting. And to the degree to which they'll shift, I don't know. I mean, politics right now is crazy, and international trade is crazy. But it's clear that the West is very much aware that they need to have a stable, consistent, from mine to refinery to end use, that isn't all being conducted and orchestrated from China. So let's continue.
The other thing is too good to be true promises. When you have a person that's promising an easy way to financial freedom, a course that shows a secret sauce that's going to improve trading returns and beat the market. And really the last one is when you have material conflicts of interest. Everyone has a conflict of interest of some sort, but when you have people who are actively trying to sell something, there's a motivation behind that's going to skew the information they're providing you on the topic. That's really something you need to look out for.
Okay, pause there.
So what about the green flags on the?
Okay, before we get to green flags, because this is another reason why I always say I am absolutely promotional when it comes to mining. That's my viewpoint. So I want people to know this is the position I'm coming from. And I've spent a lot of time now in it, that to me, it's second nature that this has to happen. It's clear. But from someone who's outside, they may not see that in any way, shape, or form. And certainly a lot of people in government are only starting to wake up to how necessary it is. So I'm very clear that when people say, people said, oh, Andrew, you're a journalist writing articles or presenting reports. I'm like, no, time out. I am not a journalist. I'm entirely biased. I'm absolutely pro mining. And it's important because then you know what's the perspective I'm coming from. I also, people know I invest in mining companies and energy companies. That's where we put. Now, of course, it's not all of my investment, but that's where our channel is driven. And we put in context towards the what ifs. The what ifs in the mining sector can be shown historically. And we've got 4 ebooks that go through all of this, that in the right market and in the market we think is coming, yes, there's asymmetric gains. There's huge potential wins. That's a fair statement to be said. Now, picking exact companies that are going to have those asymmetric wins, a lot tougher, especially when you're dealing with extraction, because of every step of the way, there's good assay results, there's permitting issues, there's this, there's that, there's a million factors. And people need to know when they come into this, especially an extraction type of play, that there are all of these nuances to it. It isn't just as simple as we created XYZ, an iPod. We think there's a market for it, and then you sell, and all you have to watch is how much advertising budget to sales coming in, and those are what analysts do. There's so many nuances from an exploration company to not only finding something, but then can we get out of the ground? So that kind of is a reminder that people need to have that. Yes, this can be, especially in the junior space, very lucrative, but there's a lot of factors that are very high risk. It's like venture cap. It's very, very high risk, which is why we put it into the bigger context of you should have a portfolio, and that should be managed by someone who knows what you are looking for, what your strategy is, who's guiding you along the way. And this, and once again, this isn't advice, but this is out there. I mean, you could ask ChatGPT, you can type it in there. If someone has a speculative portion of their investments, whether it goes 5 or 10%, they can look at things that are of that venture speculative kind of capacity. That I think it's safe for me to say. We're not giving you advice that you should or shouldn't do that. But even if you went and talked to your advisor and said, listen, as far as a speculative portion, if I've got an appetite for risk, let's talk about it. And that would be the person, because they would suss it out. Now, most of the people in the mining space and that would follow me, they've already been in it for a very, very long time. They're very well aware of how it works and the nuances to it. But we're trying to attract new people and to breathe life into the retail side, because it's dominated a large part by a lot of funds, and a lot of retail don't get to be in the room with those bigger funds having those conversations, understanding this project's going to take a couple of years, those types of things. And it's hard for a retail investor who may have bought something where they thought, oh, that was a great video, and I really like this idea of what they're doing in Nevada 3 months ago, and they return to look at it and they go, what the hell is this thing? What did I buy? It's tough. And generally speaking, that's not a broker who's selling that. It's usually they found someone online like myself, and there's plenty of other great commentators and newsletter writers who talk about all of these materials, gold, silver, copper, you name it. And they need to be reminded and shown what's happening with this company, because they're long projects. Anyways, let's continue. I'm going off on too much a tangent, but I think it's an interesting conversation because it's ones we clearly have, but it's usually tied to either I did very well and it was because I saw this video, or, oh my God, the stock is doing terribly. Why is this happening? And when we had Doug Silver on and he was talking about like finding a lifestyle company, I think that's the process. What we try to go down at the Market Mindset is to bring on that nuanced, fine balance of understanding. Yes, there are lots of lifestyle companies out there as well, but the role that we're trying to do is to find ones that are going to give you the best probability. That do they have all these ingredients? But even when you're making that ingredients, doesn't necessarily mean it's going to make a cake. Hopefully it does, but you have to have those ingredients to even have a shot. And that's what we try to instill upon people, is that it's an exciting space. There's a lot of room for growth. If the narrative and the reality of having more energy, cleaner energy, if you believe any of that, if you think that there's going to be bigger, better chips from NVIDIA or whoever else, if you think that robots, I don't mean just necessarily the walking around robots that we might have in 5 or 10 years, but do you believe that things like Optimus from Tesla, that there'll be more of these giant factories that are basically big robotic arms and robot pieces building things, then that's an incredible amount of material that's needed. And once again, we're seeing it from the current acknowledgement from both Canada and the US that something needs to be done, and we need to have a bit of control over our future. So let's go in and listen to more of Mr. Coffin talk about what's out there.
On the other side, that can really help validate a social media personality's credibility, if you will.
Yeah, so transparency is one of the biggest ones. When you have someone who's honest about their qualifications, about what their motivations are for posting content, and why you should really, they're very open with their circumstance and the information you need to be aware of. Someone who's going to focus on facts versus their opinions. They're not making wild speculations. They're sharing the sources of their information and why they're making the claims they are. And it's not wild guesses about a stock going massively higher. It's more grounded in details. And then finally, when you have someone who's more nuanced and balanced, they aren't focusing just on the positives of the stocks they like. There's a lot of stock pick content you have of people trying to show you the next big stock that's going to take off. But really, the people who are more balanced and actively acknowledge not just the risks of investing, but more specifically the risks of what they're talking about.
Okay, let's pause here. So hopefully that's something I think I do quite well. We remind people of things that we like on almost a monthly basis to our core kind of group of this position we are adding to it because we're looking long term. And we mentioned this quite a bit, and I think even at the Goliath discussion, we talked about you can't have like awesome assay results every single hole. Never happens. It just doesn't exist. You're going to have at some point, even the best of stories, say it was even Great Bear, when there was times when there was some of the holes, people looked and went, oh, is this story over? Like that was and you could see in the chart, there were gaps of time. However, very short, really, in the largest scope of things. But whenever people kind of questioned, like, oh, wait, is the run done? Like, is this it? Is it going to falter now? And it's important to know that just because you have one set of results that could be amazing and the stock goes up a bit, you could have very bland ones. But not only bland ones, but maybe that even the PGO looks at and goes, no, this falls into my expectation range. And we're very excited as a scientist in our model. This is helping to prove up something that we're seeing. A retail investor, generally speaking, doesn't have that level of expertise and nuance that a technical team has that to rely on. And that's in part what we try to do is we try to have those guests on that have real projects that can say, listen, even though that drill hole wasn't maybe what you were hoping for because it didn't hit sky high numbers, the reason why we think it's good is because of this, this, and this. And where it might be challenging is here, here, and here. And although that doesn't get a lot of views, it's not great clickbait. It's not exciting, dynamic things that people see in the news today where you have to grab someone's attention. That's the reality of this space, is that we have to kind of walk that fine line of really encouraging people and drawing them in, say with the story of robots, try to draw them in because someone might say, well, guys have nothing to do with robots. I go, we do, because every piece of material that you make to put in it comes from the ground, comes from mining. And that we try to make it adjacent to that, instead of having an opinion on, say, necessarily a robotics company. But so it's walking that fine line of weaving a story, of telling people, but reminding them too that extraction is a dirty business. It's a challenging business, but in it, there is great reward. But it is, once again, it's a speculative nature, and it's important that people can go to a channel where they feel like they're not just being sold something all the time, where there is someone who's, granted, biased, who wants money to work, who would love to see tons of extraction in Canada. I think people know that I'm very, very clear about that. But I know that there's challenges ahead as well right now, that even under the best scenario, say, regarding Canada, we've got an administration that's still in power that is going to need to be challenged in order to extract anything. That's not, I'm hopeful that they open their eyes a little bit and they're open to it. But they certainly, it's been challenging. And that's a challenge we have to face. If they want to have increased dollars coming in, if they want to let the world know that they're open for business, they will let them know. And in fact, when our prime minister met with Donald Trump just yesterday, the day before, that was a topic of conversation, was critical metals and getting them out of the ground was mentioned. And Carney had said, listen, we are going to attract money into Canada. Now, he didn't promise it was going to go in one way or the other, but it is important to see, is he going to be open to that? Because for me, if he is, then that's fantastic. No one has to get everything they want out of a potential regime change or change. But if we see that at least that ideology of the government lines up with what they are actually saying, like, listen, we want to be a leader in green technology. We want to be a leader in energy. We want to be a leader in all these spaces. That means mining. It does. And the sooner they get behind that and help to educate people, because a lot of people in Canada take the news or the government, rather, CBC/government, the news outlet for the government, as being word. So the sooner they can get behind that messaging, that could attract a lot of money into this space. So there's your both sides of what could happen. And that would mean wonderful things compared to some of the challenges we have ahead. But I was very hopeful with a conservative leader who's actively talking about making a big push. But I'm still actually, especially over the last few days, I'm moderately optimistic that Mr. Carney is going to be open to maybe not all of it, but certainly I think there could be some hope here. So let's jump back into the Plain Bagel.
Great things to look for in a creator who's going to be more honest with you.
I mean, this is bound to pop up in anybody's feed. I know it's hit mine as well. What are claims, though, you've seen recently from online finfluencers that you think and have to label as misleading?
Well, tariffs and the current macroeconomic environment are really hot topics. Really, anything that you see cycle in the news, you're going to see a lot of finfluencer content on. And you see both sides of it. You see people who believe it's the once-in-a-lifetime opportunity to make tremendous amounts of wealth. You have others who highlight that we're about to see a 60% crash, that this is 2008 plus the dot-com crisis is one claim I've seen, which really doesn't represent the situation we're in. Of course, there's risks with everything, but again, it's that nuance that really matters in those discussions. But really, the more harmful stuff is when it comes to stock picks, you have people who show very shallow analysis at times and really don't give the full picture. They focus on the incredible positives of a position without highlighting the severe risks that might exist. And you can even have things like potentially illegal tax tips that you come across when it comes to people believing you can avoid taxes if you follow certain corporate structures and the like. And certainly there are tax strategies, but it's the simplification of what are inherently complex and detailed subjects.
What about when a finfluencer has a major corporate partnership or
Just
some type
pause
of...
here before you jump to that last part that he talks about, corporate sponsorship and whatnot. But yes, so he's kind of talking about deriving what's your use of this. If it's just entertainment, because it sounds strange, but a lot of people do find financial opinion as entertainment. Whether or not you turn on the Kramer on CNBC or one of these, most of those are opinions. They're op-eds. In fact, most news today is op-ed. It's not necessarily fact-driven. It's very ideological. It's no different in the market as well. And we know as well, like, I mean, entire shows on major channels are sponsored by XYZ. So this will bridge us into the sponsorship idea that we see on that massive TV kind of mainstream news narrative. But it's to remind people that, listen, whether it's the discussion of a new dollar, a digital dollar, we're going to go to a Fed coin, we're going to go to, these are all fun topics. Some people go into more detail than others. Some people go way out to, it's the end of the world, the US is about to collapse, because it's content. And you can loosely make arguments for it. But, a lot of those extremes are like most things in life. They're extremes. They're not necessarily real. And they don't come like laden with a ton of data, which is, like you were saying, a pretty good telltale sign. Also, if you're reading a lot of blogs and there's no hyperlinks to anything, that's a very good telltale sign that you're just dealing with tons of opinion, which is fine. You might enjoy someone's opinion and go, you know what, that's an interesting take. And if nothing else, if you read someone and they've given you an interesting take to go, I wonder if that's true, and you end up going into a large language model like ChatGPT or Grok and go, is this true? Or is there, you're going to find fascinating stuff. And especially for anyone who's young, who's wondering, what am I going to do with my life? Or what does the future look like? If you have a bit of information, like, is BRICS going to become a currency? Like, it'll tell you. You can put anything into these things, and it's going to scour everyone's opinion out there. And once again, it may not be 100% accurate or factual, but it's going to really get people curious and going, very interesting, which is kind of what I'm getting to, is that unless you are a licensed advisor dealing specifically with a client, and you're providing them advice about how to invest, the rest is just opinion. And say in my case, where I like a stock, and I think, I'm going to buy more of XYZ. I mean, I like Goliath. I'm going to buy more Goliath. I think it's great. That is taking into account me very much understanding my own risk threshold, understanding my current living situation, where I see myself in a couple of years, what my expenses are, all those things. Never mind the fact that I have extensive decades of investment advisement, financial planning, working at RBC, working at Merrill Lynch. I come back with a ton of knowledge where my take is going to be dramatically different than even a dear good friend of mine I used to row with, who's got a family, he's got kids, he works for the government. His outlook on things, even though he might be fascinated in some of the, say, mining stories or junior exploration, is that his entire situation is so beyond what mine is, that he has to understand that, and that his evaluation of risk, and he has to know that, listen, if you're looking at any of these things, you're in this far off, you're in a high risk area. But with high risk, you want to say, in that high risk, is there an opportunity for high return? Because if it's just high risk with no return, well, that's not really a good, valuable waste of time in any pursuit. So let's just jump into the final point here about sponsorship as well, because once again, it's a critical piece of the puzzle when you're dealing with anybody who has any kind of opinion on anything out there.
Collaboration that's going on. What's the way to kind of read through that and assess what's relevant for you versus what's perhaps necessary of doing a little bit more vetting?
Yes, so that's actually a really interesting topic, because there's a good percentage, the vast majority of content that includes recommendations doesn't actually include any disclosure about expertise, background, qualifications, or if there's any sort of arrangement. You commonly see affiliate links and the like without any sort of disclosure around how those affiliate links are paying the creator. So looking out for any sort of signs of that sort, why you have to ask yourself, why is a creator highlighting a certain service or product, and really be cautious of that and look for that transparency. If you don't see that, if you see someone trying to sell you something and they really aren't qualifying it with the needed information, then really, again, you should be maybe looking elsewhere.
Perfect. Well, we'll stop there. So sponsorship, I mean, that is a big part of the newsletter world. And it's anything from just advertising, someone putting an advertisement on, to someone like me, saying that I like something or don't like something. People do get paid, and you should have an announcement saying this is paid content. If you're getting paid for any kind of content, that kind of transparency is necessary. We make sure to let people know, hey, we're buying the stock or we're not buying the stock. A lot of times we have, I'd say the vast majority of our content is not paid. We try to find really interesting stories and guests that we think we'll have a great conversation with, that'll help people get excited about the market, and ones that maybe have brand news that's out there. And often we just let them sell it. I mean, we provide a platform that people have a lot of interest on, that people, and growing, quite rapidly, but that people can then evaluate themselves, because as part of what we do, and we've got 4 books walking through how we evaluate things and things that one should look at, including evaluating sponsorship, because that's a whole other topic as well. When you're dealing with someone, even like myself, is that people have to ask, well, are you liking this because you're selling it to me? And we won't get into that conversation, because that's that's a very touchy topic with people. But you need to know, like, is the person that's chatting about these stocks, are they like a buy and hold person? Are they trading them? Do they have any position in them? Do they even like the sector, or are they just writing for stories? And when you know that, then you kind of have a better sense of what you're dealing with. And then also, there's a, not even a fine line, there's a very direct line between what one can and can't say. And I mention it all the time, and it is boring to a lot of people, because it's absolutely critical and necessary. And I'm not saying it to be holier than thou, but the ethical implications of trying to advise someone you don't know anything about, even if I knew a little bit about, is not right. When you're dealing with someone who's putting their money into stuff, they have to be well aware that, especially in exploration, that this is risky. This isn't money like putting money towards Johnson & Johnson or a blue cap being around forever. It's a dividend paying stock. That's a very different conversation. Hard to get a lot of people's attention to be the dividend person on the internet. But you have to understand that level of risk, so that you're going back to your advisor and having the conversation, and they're going to help steer you correctly as well. And if you have someone who's saying, yes, there is an opportunity, and when the opportunities happen, here are a couple of ideas of companies that had good results and went very well, then that's a fair approach to a market that, once again, we see as being, yes, normally whenever I was at Merrill Lynch, would I look at a junior market? Never. No interest, because the risk was too high. But what the world is going through, that's what drew me in. This big change, the entire world narrative of a cleaner energy, what that's going to take, is that it didn't take long to realize that's a massive amount of metal. Now, does that mean that XYZ company is going to be the one? That's going to take a lot of work. And we've put a lot of that work together, and we're going to be releasing it. And we try to have people on that will give that fair, honest discussion, but also try to get them excited about it. Because once again, it's critical that we have these things, and that you're going to hear more and more and more about it. And we're going to have to come to terms that we do start digging in the ground and applying more cash to that R&D phase, to finding these things so that we can have cool robots and more flying cars or whatever else. So I hope this was informative, because it once again, it never hurts for me to relay to people my bias, what I would love to see. I would love to see a huge mining market surge and just go crazy. I would love to see the government come out and say, you know what, we want to encourage individual investors, and we're going to give a tax break if you're helping R&D side of getting metals clean and responsibly out of the ground, so we have a supply chain. I mean, yeah, I would love to see that. And if I was in power, I would do that on day one. So I think when you know the bias and the perspective that someone's coming from, it's important. But you also know that it's not coming from just willy-nilly. I've read some stuff online, is that I have a background in finance. I've worked at Merrill Lynch. We work with some great companies, some great family offices, some funds. We've got a good backing, and we've got good access to experts and CEOs in the space, and that's what we try to rely on. And so I wanted to kind of open up this conversation, look back for everyone. Any comments, suggestions, any thoughts? And of course, we'd be happy to even host this kind of conversation behind the scenes with anybody that's interested. But I thought this would be a bit of a change up in discussion as well. as we await more news coming out from both sides regarding trade and tariffs and where things are going with this critical metals discussion and story and the future of all the technology that we all want. So everyone, have a great day. Reach out to us, and we may see you on Friday. I have to organize a few things. If not, we've got 2 great guests coming up next week as well. We got Gwen Preston from West Red Lake Gold. She's always great to talk to. And of course, we've got John Pasalacqua from First Phosphate coming in next week as well. So thanks, everyone. Enjoy the rest of your week, and we'll see you soon.